Mixed cues from Wall Street with the S&P 500 finishing slightly below the flat line as earnings take center stage. Fed's beige book shows the U.S. economy saw little change in recent weeks after the banking turmoil of last month. Stocks in the Asia-Pacific trade largely lower as investors continue to take stock of U.S. corporate earnings. The SGX Nifty, however, is signaling a mildly positive start for the Indian market. Oil drops to a two-week low on a firm dollar and fears that rate hikes could weigh on U.S. demand. Brent crude trading around $82 per barrel. IT major HCL Tech is all set to report its fourth quarter numbers later today. Its constant currency revenue growth is expected to see a decline, weighed down by seasonal weakness in the software business. India's second Apple store is all set to open in South Delhi today. Ahead of the launch, CEO Tim Cook meets Prime Minister Narendra Modi. Sources tell CNBC TV 18 that Apple has sought continued policy support to scale up operations. Okay, those are the top headlines. Good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. We are going to be talking about a lot from earnings to global markets. But as always, let's take a look at what the Asian markets are doing because they are taking cues from the US markets, largely mixed, so to say. We have the Taiwanese index, which is absolutely on the flat line with some positive bias. Hang Seng is higher in trade. But if we look at something like a Kospi, it is down 0.5%. We have Shanghai, which is also lower in trade. Nikkei, though, is bucking the trend with gains of around 36 points. So you have to say it's quite a mixed trend, something that we saw in the US markets as well. And a whole host of US corporate earnings is something that we are taking cues from as well. SGX Nifty, that should come up for you on the screen, and that one is indicating that the start for our own markets, well, that could be in the green. It's the weekly options expiry as well, so interesting moves are expected in the last 1 hour of trading session. At the highs of the day right now, SGX Nifty indicating an open in the green by around 40-odd points. Let's talk about the U.S. markets. A lot of action is happening there. Wall Street ended yesterday's trading session mixed. The Dow Jones shed nearly 80 points, while the S&P 500 was flat. The tech-heavy NASDAQ index was the relative outperformer with a mild green tick. Focus continues to remain on earnings. Shares of Tesla slipped in after hours as the electric vehicle maker's quarter-one earnings missed estimates as margins were hurt by price cuts. Company reported revenue of $23.33 billion versus $23.21 billion expected. Net income came in at $2.51 billion, down 24% from last year. Meanwhile, shares of IBM rose after the company reported earnings that surpassed expectations as the company's margins expanded. Well, let's stay with the U.S. markets. The Federal Reserve has released its first beige book after the banking crisis. CNBC's Steve Leisman has all those details.
Beige book saying that economic activity was little changed in the period, the 6 weeks ending in April here. First part of April, 9 districts said there was no change or a slight change. 2 said they saw the outlook deteriorate. That's of the 12 Federal Reserve banking districts. Consumer spending overall was, hold on 1 second here. Consumer spending was generally flat to down. Price growth was seen as moderate. Auto sales were steady. Manufacturing activity was flat or down. Travel activity picked up. Now, there's some important information here. We've had a chance to look at it briefly. I think the Fed's going to get a lot of sense of what's going on in the banking business from this beige book. Lending volumes were down and loan demand declined. That was along with what was said in the prior beige book. Banks tightened lending standards amid uncertainty and liquidity concerns. First time we've had that liquidity concerns in the beige book in a while, certainly. Employment growth moderated somewhat. The labor market was becoming less tight, and price levels rose only moderately, and the rate of price increases appeared to be slowing. There was some modest to sharp declines in non-labor input prices and significantly lower freight costs. Guys, that's what I've been able to get so far. What I'll do later is dig down into each bank has a banking and finance section in their report of the 12 banks. So, but right now we're hearing some liquidity concerns and uncertainty. And of course, you guys understand the importance of what's happening in the banking business to the outlook for the economy and of course to the Fed.
Okay, that is an update from Fed's beige book. Important commentary out there. Moving on now, news of layoffs continue to pour in from Wall Street. ESPN now will begin layoffs early next week as part of Disney's cost-cutting efforts. Sources told CNBC that cuts will include some on-air talent and management. However, the number of layoffs is still unclear. Remember, Disney is eliminating about 7,000 jobs in 3 rounds, with the second round happening sometime next week. Okay, all right. With that, let's move on. That's all about the global market action. We continue to focus on the moves there as well. But how will these overnight cues impact our own markets? We have domestic cues in terms of our own earnings as well. We have our research team joining in to tell you just that, what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, yes, the markets ended with cuts in what was a range-bound session yesterday. The sensex and the Nifty fell for the third straight day, and FIIs were net sellers for the third straight session as well. So FIIs sell figure, however, was much less versus what we've seen in the past 2 days. So for Monday, the net sell was over 530 odd crores. For Tuesday, FIIs net sold over 800 odd crores, and that has dwindled down to around 13 odd crores in yesterday's trading session. DIIs were net sellers too yesterday to the tune of around 110 odd crores. Now, in terms of what is taking place globally, the earnings from the US will be top of mind, and that is really what is driving sentiment at this point in time. It was a mixed close for the US. Tesla underperformed, but the likes of IBM, in fact, reported a good set of numbers. Asia is largely lower on the back of Wall Street numbers. Oil is something which is possibly going to benefit us on the fringe, because Brent crude has now come down to around $82 per barrel. It is lower on account of a strengthening dollar, which has sparked weak demand concerns as of now. In terms of result reactions, we do have a lot of result reactions to watch out for. So Mastech, Tata Communication, ICICI Securities, a lot which will take place from the broader markets. And in terms of results today, we have the likes of HCL Tech, Cyient, ICICI Pru, Sterling and Wilson to watch out for. We do have big numbers over the next couple of days, but for today, I'm just going to narrow it down to a couple of these. Well, just watch out for what the Met Department is also saying, because they have indicated that the heat wave is likely to continue over East India during the next 3 days. There could be a wet spell over Northwest India from April 19 to 21st of April. What the larger reading would be in terms of the agri outlook would be something that the street would probably want to watch.
Okay, all right. So those are all the cues. Thank you so much for those, Ekta. A lot of stocks that will be in focus as well, as Ekta mentioned. Vivek, what do you have on your radar?
Well, good morning. Like we mentioned, quite a few results that came in post-market hours yesterday, and there will be significant reaction. First on our list is Mastech, steady set of numbers from the company this time around. On a sequential basis, dollar revenues went up by almost 7.8%, coming in closer to the $86 million mark. Now, when you're talking about the rupee revenue, up almost 7.7%, and EBITDA margins coming in at almost 17.7%. Once again, profitability on the back of that went up almost 13% sequentially. ICICI Securities, a muted quarter from the company this time around. Revenues was flattish, coming in at the 885 crore mark. However, profitability was down almost 7%, coming in at the 262 crore mark. Tata Communications, a disappointing set of numbers from the company this time around. Some one-offs, however, the headline numbers have been marginally below what analysts were anticipating. Revenues are up around 1%, coming in closer to the 4,568 crore mark. EBITDA margins, contracting in, coming in at 22.6%. Profitability down almost 17%. Some of the other companies on the back of news flow, NBCC getting an order worth almost 208 crore. Ultratech Cement has gone ahead and increased its capacity. Now the grinding unit in Bihar has seen increased capacity of 4.7 million tons per annum. And Equita Small Finance Bank, some positive news flow coming in there. RBI has granted an authorized dealer category 1 license to the bank. So some positive development as far as Equitas is concerned.
Okay, all right. A lot of stocks in focus. Finally, let me go across to Nigel, joining in with all the cues from the F&O space this morning. Hey, Nigel.
Well, morning, Sonal. Yesterday we saw the premium on the Nifty. The futures out there, it contracted around 30 points from around 50 points out. So there were some signs that maybe there was some shorting activity that was taking place. And that's correct, because the FIs, well, they added closer on 3,500 short contracts, closer on 7 shorts added for every 1 long position. The positioning now continues to remain net short, though it's not as bad as what we were seeing in the recent past, at close to around 64% of the positioning on the short side. On index options, well, the activity is mixed out there. So they bought both calls as well as puts, but they bought a little bit more calls in comparison to puts. But on the option side, on the writing side, well, they wrote more puts than calls. So that's telling you that maybe at lower levels, we'll like to see some buying as well that'll come in there. A couple of strikes we're looking at, given that today is expiry day. The 17,600, 17,650 call, both of them were very, very active. Now, the 17,650 call, the premium ended closer on 30 rupees. But at the start of the day, it was around 50 rupees. So for those call writers, they're looking to defend the 17,700 odd mark, which becomes a bit of a resistance on the upside. On the downside, though, 17,600 put, well, that saw a fair bit of open risk built up. So the last couple of days, in the last few days, we've gone around that 17,570 odd, and we have bounced out there. So it appears the 17,550 odd level should hold out at least for today's expiry. And on the upside, there's resistance at around 17,700 odd. The bears believe that mark is not even going to be seen. Now, we're going to be seeing a positive opening, so let's see whether or not we can build in from there. But if we can get past the 17,700 odd mark, then those call writers will run for cover. So let's see how this one goes. Back to you.
Okay, all right. Interesting times, right? Thank you, Nigel, Vivek and Ekta for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break. As we do that, let's listen into some commentary coming in from veteran investor Mark Mobius of Mobius Capital on emerging markets like India and China.
India is really a very exciting place to invest in emerging markets right now. But the good news also is that China is coming back. You were seeing the Chinese market now recovering. China has underperformed and done very badly in the last few years. Now it's coming back. So people are getting more interested in emerging markets because China weighs so heavily in the emerging markets index. They're about 30% of the index. So I would say people have to look at China, most definitely India.
Welcome back. It's time to talk about some important earnings now. IT major HCL Tech will be reporting its fourth quarter numbers later today. My colleague Rima Tendulkar is standing by with the key expectations. Rima?
Well, it's expected to be a muted quarter. If TCS and Infy have reported a muted set of earnings, I don't see why even the rest of the IT companies will be able to buck that trend. So don't expect, fireworks from HCL Tech. But remember, the expectations were set prior to Infy and TCS reporting their numbers, and the stock has already fallen 5% since the beginning of the earnings season. So in a way, it's pricing in some miss on expectations. But this is what the consensus expectations were. And as I repeat, these were set prior to the miss from Infy and TCS. A dollar revenue growth of 0.2%, constant currency revenue decline of 1 to 1.5%, and this will be led by the normalization of their products business or software. Now, HCL Tech generates about 70% of its revenues from services and the balance 30% from software or products. Now, last quarter, this software or products business did exceptionally well with a growth of about 30%. Well, it doesn't grow at 30% normally, so that growth that they saw in Q3 will normalize, and typically Q4 is weak for the software business, and that's the reason why on a quarter-on-quarter basis you will expect the normalization, the weakness in the products business to reflect on the overall numbers. The question is going to be on services business, which is comparable to Infy and TCS, and can they perform better than what Infy and TCS? That quick peer comparison will also come up for you on your screen. TCS had reported a 0.6% constant currency growth, while Infosys was a minus 3.2%. The key is going to be their FY24 guidance. Remember, Infy shocked the street with its guidance. For HCL Tech, we're working with a growth of about 5 to 7%. For the services business, about 6 to 8% growth, and margins are likely to expand according to the poll. But Infy didn't manage to expand the margin guidance, so we're going to watch what HCL Tech does. But expectations are of an 18 to 20% growth.
Okay, very important to watch, especially the commentary as well, right? And Rima, thank you so much for laying down those expectations for us. HCL Tech will be in focus in today's trading session, and so will Tata Motors be, because Tata Motor-owned luxury car maker JLR has unveiled a 5-year plan to electrify its fleet. The company plans to invest £15 billion over these 5 years to accelerate the EV transition, and JLR aims to launch its first all-electric Range Rover in 2025. CNBC TV 18 Sanjay Suri joins us with more details. Sanjay, what's the EV strategy?
JLR has spelled out its reimagined strategy for the next several years, and it's pointing the way of all electric, all luxury, very green, very clean. The company plans to invest £15 billion over the next 5 years in electric propulsion, with plans eventually to go carbon neutral by 2039. The Range Rover is due to go all electric pretty soon. The company is taking orders from as early as autumn this year for an all-electric Range Rover to go on the streets in 2025. The engine plant at Wolverhampton is switching to electric propulsion production, and JLR clearly is headed the way of sourcing battery packs and cells through the Tata plant due to be built in Europe. Sales from Britain alone have topped £12 billion a year currently and growing steadily. The company is planning to build on that in a luxurious sort of way. The company is sticking to the high end, none of those rough and ready Land Rovers of the old kind. By way of design, the company is headed the way of simple, clean lines, keeping it light, no crowded buttons. That matters for looks, of course, but it matters for battery life. JLR is working on a 700-kilometer range for the 2025 Range Rover with a 320-kilometer charge in 15 minutes. JLR clearly plans to lead the change in this fast-changing world of driving.
Thank you, Sanjay, for joining us with all those important details. Moving on from EVs to the RBI now. Sources tell CNBC TV 18 the Reserve Bank has invited the board of directors of public and private sector banks to a conference next month that will focus on governance issues. The first of its kind conference is set to be held in 2 batches on May 22nd and May 28th, and will see the RBI governor addressing matters not just pertaining to governance but also ethics, the role of the board with respect to functionalities, and the central bank's expectations on the supervisory front. Note that sources also say that foreign banks too may be invited to the crucial meeting. Okay, on that note, we'll do one thing. We'll take your leave and slip into a short break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still watching Power Breakfast on CNBC TV 18. Well, the frenzy over Apple opening retail stores in India continues. The tech behemoth will open its second store in the capital in South Delhi's Select City Walk Mall. Like Mumbai, it will showcase all Apple products and experiences as well. And ahead of the store opening in Delhi, Apple CEO Tim Cook met Prime Minister Narendra Modi in Delhi. In a tweet, Cook said that the company is committed to growing and investing across India. Sources say that Apple has expressed its happiness with support extended to industry and has sought continuation of policy stability and continued support for bringing component ecosystem to India. Ashmit Kumar is joining us with more details on this one. Ashmit.
Well, what sources are telling us is that Apple, which has had a hectic last 5 to 7 days, is in fact quite confident about its plans going forward. In fact, over the last 2 years, we understand that 1 lakh jobs have been created by Apple. That's as far as manufacturing itself is concerned. And Apple is quite confident, is quite bullish that this figure can be doubled in a very near time frame. Not just that, Apple, what sources tell us is that Apple is broadly cognizant of the support that has been extended by the government and is in fact seeking for continued support from the government, especially as far as manufacturing electronics in India are concerned. So that is clearly a focus area for Apple. Meanwhile, in terms of areas that need more work, Apple believes, sources tell us, that there is a need for continued policy stability required in terms of the electronics industry. Not just that, Apple also believes that there's continued support required to bring the component ecosystem to the country. Keep in mind that of the 120 component suppliers to Apple, only 12 call India home. Further, Apple, in terms of areas that need more work, feels that there is more support perhaps needed from the government in terms of skilling. And finally, in terms of its plans ahead, there is a fair bit of focus on R&D as well. There's an accelerator that Apple will be setting up in Bangalore for training app developers.
Okay, Apple's India push. Ashma, thank you so much for joining us with all those details. Moving on to the world of commodities now. Manisha Gupta is joining us with all the update from the commodity space this morning. Hey, Manisha, good morning.
Hi, morning, Sonal. Thank you for that. Well, we're looking at the crude oil prices, which have seen a 2% decline in the overnight markets. It's trading at a 2-week lows right now, with the street expecting that the U.S. Fed will deliver a 25 basis point rate hike in the month of May. And not just the U.S. Fed, you could see a similar stance coming in from ECB, which are lining up expectations of 3 rate hikes in this year. The Reserve Bank of Australia also says that the pause in the interest rate hikes is what they've done, and there could be instances of further rate hikes. And this is not auguring well for the industrial commodities or the precious metals for that matter. So the crude oil prices have seen a decline. We're trading below $80 for the WTI crude right now. The metal prices also have come off its highs. So whether it's copper, zinc, aluminum, we are trading in the negative in the Asian markets right now. Gold is trading at a 1-month lows as well. So everywhere that you look, there are near-term demand concerns, higher interest rates, and that seems to be spoiling the mood.
Okay, near-term demand concerns. That's what's happening in the commodity markets. Thank you, Manisha, for making sense of what's happening in that space. Quickly taking a look at what the Asian markets are doing. The SGX Nifty is indicating that the start for our own markets could be in the green, and largely on the greener side is what the indication from the Asian markets currently is. We'll do one thing, take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.